So I created a strategy a week ago, and just to be sure that everything is working fine, I had to backtest this strategy. But not just that, I had to try this on one of my trading accounts, and I used this strategy to double one of my trading accounts. Seriously, that was so amazing. But anyway, in this video, I'm going to share that same strategy with you guys. But don't forget to get your free share of Tesla worth all the way up to $50 when you sign up with VANTAGE FX as your broker with the link in the description. So go get your free share of Tesla right now. Okay, so right now I'm going to show you guys this strategy and I'm going to teach you guys step by step. So right here, looking at the chart, let's take a bigger picture of things. Like some people will be like, how will you know when price is about to go up, when price is about to go down? Looking at the chart here, right here, pretty much it looks confusing, right? But this one I'm going to show you now is going to make everything more simple and easy for you to understand. So let's go back into the normal size of the chart and we are going to use this expression here, for example, this price movement here, for example. So basically, what can you see here? You could see market structure and pattern coming to play in. You could see the higher highs, the lower lows, the lower highs, and all those good stuff. But what I'm going to do now is that I'm going to bring out all these things out and show you guys the bigger picture of what it is. So basically, as you can see here, I've already followed price movements using a tool. So let me just bring this out to a very clean separate area so you guys could see what I'm talking about here. So basically, what are you guys noticing from this market structure? If you say price is going an uptrend, you're completely right. But I don't think anyone should say price is in a downtrend or price is in a consolidation only looking at this market structure here. So basically, from this market structure, you could see a push phase and you could see the exhaustion happening. Same thing again happening here, push phase and same thing, exhaustion. So this is basically what's happening when price is going in an uptrend. So when you see market structure like this, there's some kind of unconscious questions you actually ask yourself. So the first unconscious question you ask yourself is, where you're going to take your entry. The second is, when is the retracement going to happen. The third is, how long are you meant to hold the trade. And the fourth is, when are you going to exit? So all these questions that I've set out now, they are indicators that actually solve that problem. And here I'm going to share those indicators with you guys as we go step by step. So as you could see from the charts, the number one question you actually ask yourself is, where do I get in my entry? That's the beginning question of everything. Let's take it for example, we're in this part of the market and yes, let's take it like this whole phase doesn't exist. Let me use a tool for that. Let's take it for example that this whole phase doesn't exist. This phase is actually blacked out. So speaking about entries, we have to know that whenever the market is going in an uptrend, we have to take buys, and whenever the market is moving in a downtrend, we have to take sells. Now the question is, how do we get our entry? So the indicator that actually help you in getting your entries is the moving average. So right now, let me add in the moving average so you can see exactly what I'm saying. Okay, so looking at the market right here, we actually have our entry. Okay, let me explain the moving average. Whenever price is above the moving average, as you could see here, this actually means that you can take a buy. But when you see price below the moving average, it actually means that you should take a sell. So right now, let me show you examples of where you can take entries of a buy. So this right here, as you can see, this is an entry for a buy. I think I need to make that white. So let me make that white. So this right here is an entry for a buy. This right here again is another buy, right? And you could see here again, this is another buy. And remember what I said, once price is below the moving average, you're looking forward to take sales. Now let's check in for where we can actually take sales. Okay, you could see clearly that price is below the moving average, and this is a great point to take in sales in the market. So as you could see here again, you could see that price went below the moving average, and once price went below the moving average, we are actually taking in sales. That is an entry right there. So if you want to take your entries in the market, you have to use the moving average to take in your entries, whether is it buys or sells. Now the second unconscious question you actually ask yourself when you're trading is, when is the retracement going to happen? Yes, we know that price is in an uptrend, but once price is in an uptrend, it doesn't just shoot up immediately, it actually retraces. It pushes up, it retraces, it pushes up, it retraces. So that's what keeps on happening. Now, how will we know the retracement in the market? All these things you see right here is retracement. This is a retracement. This is a retracement. So I know some people will be like, how will I know when the retracement is about to happen? Is this rocket science? No, it's not rocket science. This is very simple and also very easy to understand. So the indicator that is actually used to find the retracement in the market is the Fibonacci retracement. So from the name you already understand what it is. Fibonacci retracement. Fibonacci is a mathematics formula. So if you've been into maths or if you study maths, I don't think Fibonacci is a new thing, but now the new thing is retracement. Thinking about Fibonacci, I know you might be saying I need calculations and all that. No, you don't need calculations. The Fibonacci retracement actually calculates all these things for you and make it easy for you to understand. So right now, let's get into the Fibonacci retracement. So this is the Fibonacci retracement. A lot of people, they know about the Fibonacci retracement, but they don't know when and where to place the tool. So right now, what we're going to do is that we're going to plot in the Fibonacci retracement. But now, let me show you guys the right way to plot in the Fibonacci retracement. Where to plot in the Fibonacci retracement is at the beginning of the trend. No, not at the middle, not at the edge, not at the circumference, at the beginning of the trend. So what we have to do right now is to find the beginning of the trend. So where's the beginning of the trend here? So this is an uptrend, right? So where's the beginning of this uptrend? The beginning of the uptrend is this section over here. So this section here is the beginning of the uptrend. So let's place in our Fibonacci tool just at the beginning of the uptrend. So let's do that. So let's plot in the Fibonacci tool and right there, scroll it right up to the end. Now, this is what the Fibonacci retracement does. It actually shows you levels in the market with which the market can retrace from. Let me show you guys this clearly. So you could see from this point here, price retraces on this zone and it ended up landing on this zone. Then that same push is happening and still the same thing happens here. Still the same thing happens here. And still the same thing happens here. Come on, this is not coincidence. This is not coincidence. This is the Fibonacci retracement showing you the point of retracement in the market. So in the Fibonacci retracement, there's the 0%, there's the 23.6%, 38.2%, 50%, 61.8%, 78.6%, and the 100% level. So this is actually the point of retracement in the market. And how can we make that visible? We can actually make that visible using the Fibonacci retracement tool. First off, how to get your entries is by using the moving average. How to find in retracement in the market is by using the Fibonacci tool. Although I've not given you guys the settings for all these things.
Show you guys the setting of the indicator where we are done with the explanation of the 4 questions.
So now the second question you actually ask yourself is, how long are we meant to hold this trade? This is a very important question here. And the answer to this question is, we have different types of traders. We have the scalpers, we have the day traders, we have the swing traders, and some others. So this type of traders have different perspectives to look at the markets. Scalpers are looking forward to enter into the market and get out of the market as fast as possible. Day traders are looking forward to enter into the market, hold the trade for about 1, 2, 3, 4, 5, 6 hours, while swing traders are looking forward to hold trade for 1 day, 2 days, 3 days, 7 days, 4 days. So this how to hold the trade, it actually depends on the type of trader you are, and the type of trader you are depends on the type of time frame you trade. A scalper cannot be trading on the 1 day time frame. A scalper cannot be trading on the 1 month time frame. The scalper has to be trading on the 1 minute time frame and the 5 minute time frame to get the accurate positions in the market. While the swing trader is not meant to be taking analysis from the 1 minute and 5 minute time frame. The swing trader has to be taking analysis from the 4-hour time frame upward to the 1 day time frame and to the 1 month time frame. So this is exactly what you should be looking out for. So the first question you should actually ask yourself is, are you a scalper? Are you a day trader? Or are you a swing trader? So this is a question I want you to ask yourself before you actually ask yourself, how long can I hold the trade? But that is the psychological part of things. But let me give you guys the technical part of things, which is on the chart. But I'm going to explain that with the moving average. So as you can see, price actually went above the moving average. This actually means an entry, right? My moving average is on the 4-hour time frame. If I were to be a scalper, I have to go back to the 1 minute time frame. I'm putting this indicator to know what you're doing. You understand? So, but let me talk about the technical aspect of things here. So you can see clearly that price was above the moving average. So I'm not meant to exit my trade until price actually goes in the opposite direction of the moving average. As far as price is continuously above the moving average, I'm looking forward to hold my trade even longer based on the type of trader I am. So now the second question you actually ask yourself is, when do I exit the market? Of course, you have to take your profits out of the market. Yes, you're in profit, but when are you going to close that profit? Now I'm going to show you guys the indicator you have to use to actually know your exits in the market. So let's go back to the moving average. Remember, we used the moving average to get our entries, right? So now what we're going to do is that we're going to use that same moving average to get our exits. Okay, the first thing here was that we said this is an uptrend. When do we have to take in that uptrend? Is once price is above the moving average. Simple fact. Remember, first off, the first thing we said here is once price is above the moving average, you have to take in a buy, right? So we hold our trades, we hold our trades, we hold our trades, we hold our trades. When do we have to get out of the market? So I want you guys, looking at this, I want you guys to see this. Once price goes below the moving average, we have to take our profits. It's just simple. Like when you entered, price was above the moving average, right? So you have to take in a buy. But now price just went up below the moving average, and what you have to do, you have to collect your profit, of course, because once price is below the moving average, the market is going to sell. So let's have examples of that right now. So you can see, first thing here, you take in a sell. When do you have to go out? You have to get out in this point, right? And take in a buy and exit your buy from this point. Taking a sell, exit your sell at this point, taking a buy, and still the same thing, rinse and repeat. So right now what I'm going to do is that I'm going to show you guys the settings to those indicators, which is the moving average, the Fibonacci retracement. So what you have to do here is that you can actually search the moving average, and the moving average will actually appear here. So it comes default setting with 9. So you saw two moving average on my screen. So the first moving average is moving average 20, and the second moving average is the moving average 25. And now let's talk about the Fibonacci. So the Fibonacci is another tool again that people don't really get the setting. But let me go to the setting area. What I want you to do now is to actually pause this video, take a screenshot, do the same thing, but anyway you can still take a screenshot of it. So pause this video and take a screenshot of it. So now let's get into the deeper part of things, and right here we're going to add in every single indicator that we've actually mentioned and actually try it with examples. So let's take this for an example. So you can see this chart here, and by the way, this is a downtrend. So the first question we actually ask ourselves is, where do we take our entry? So our entry problem, like I said, is actually solved with the moving average. So right now let's add in the moving average to the let's add in the moving average, and right there, and right now, as you can see, that problem is actually solved. You could see, where did the crossing happen? Once price, remember what we said, once price is above the moving average, we're expecting to take a buy, and once price is below the moving average, you obviously, you have to take a sell, right? And where do we see that crossing happening? We see that crossing happening over right here. The second thing we actually need to know is, where are the retracements in the market? So let's add in the Fibonacci retracement. I mean, actually add the Fibonacci retracement from the beginning of the trend. So where is the beginning of the trend? Right here, this point here. This is the beginning of the trend. So we add that and we draw it to wherever point you are in the market. But let's put it to this point here, and you could see right there, the Fibonacci retracement actually gave us the point where the market will be retracing from. So clearly, price was retracing around here, but although we didn't get any retracement around that point, but price still came back there to actually retrace at this point. So you can see the Fibonacci is already giving us those retracement points. Now the second question we actually ask ourselves is, how long do we need to hold the trade? Okay, How long do we need to hold a trade? I want to ask you guys that question. Leave a timestamp and answer it in the comment section because I would love to hear your thoughts. So I hope you guys loved this video. If you did like this video, make sure you give it a thumbs up, and if you're not yet subscribed, make sure you hit that subscribe button. And yes, to get your free share of Tesla, you can actually open a VANTAGE FX account with my link when you use the link in the description. With that being said, guys, I'll catch you guys on the next video.